In today's episode, I want to talk to you specifically about IRS audits. And this may actually turn into a series just because there are a lot of misconceptions about what an IRS audit is. Now, I do want to specify this is an IRS audit. Remember, with the whole states' rights thing, each state determines how they are going to conduct their audits. However, a lot of them do follow suit with the way that the IRS handles them, except again, states' rights, they do have the right to switch it up a little bit.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 61 of the Tax Relief with Timalyn Bowens podcast. In today's episode, I want to talk to you specifically about IRS audits. And this may actually turn into a series just because there are a lot of misconceptions about what an IRS audit is. Now, I do want to specify this is an IRS audit. Remember, with the whole states' rights thing, each state determines how they are going to conduct their audits. However, a lot of them do follow suit with the way that the IRS handles them, except again, states' rights, they do have the right to switch it up a little bit. Okay? So, one of the most common misconceptions that I see about what an IRS audit is, I hear when people are scared of dealing with the IRS, they're afraid to get audited. And they think that somebody is going to show up in a suit at their front door, knock on the door, want to come inside and see all of their financial records without any notice, without any call. They're just going to randomly show up one day because something was wrong on their tax return, or because they owe the IRS for this tax year and they can't pay it in full. Well, friend, there is a possibility in the past that somebody from the IRS would show up at your door. There's a even smaller possibility now just because of the reduction in force that has taken place in 2025 with the IRS. So chances are very, very, very small that someone in a suit is going to show up at your door that is actually from the IRS. When the IRS says audit or refers to audit, it's actually a much more broad term, okay? An IRS audit is a review or an examination of an individual's accounts and financial records, okay? And the reason that they are doing this review or exam of the individual's accounts and financial records is to ensure that the information reported on the return is reported correctly according to the tax laws and to verify the reported amount of tax is correct. So, before going into a full-blown audit, you could potentially receive a notice from the IRS because maybe there's a discrepancy within their system, what was reported as income for you from a third party and what you actually reported on your return. Because remember, you're supposed to get copies of all your W-2s, 1099 interest forms, etc., and etc. But that third party, that employer, that broker that is giving that information to you is also supposed to be giving it to the IRS as well. So When you file your tax return, the IRS is running that up against what's been reported by the third party. Okay. And that's how they find the discrepancy. Now, in some situations, the audit may be random. But again, it doesn't mean somebody's going to show up at the door. You could have what we call a correspondence audit. Now, before I get into all that, again, this is likely going to be a series because a lot of people right now are trying to catch up on back taxes because we know with the reduction in force that's taking place at the IRS, it is harder to get in contact with them. But we also know that our country is in a lot of debt. And the IRS is the door, or I guess you could say the window that the United States brings money in through, right? That's how we collect revenue. That means if we are in an economic crisis and the country needs more money and we're trying to close the gap on this debt, the IRS is going to have to make sure that they're bringing in revenue. Okay. But I mentioned what an audit is for individuals. When we talk about an IRS audit for an organization, so this could be a small business, this could be a church, this could be a nonprofit, they are going to be looking at the books. So, yes, I don't care how small your business or organization is, even if you don't have an official bookkeeper, you should have some type of system in place where you are keeping track of your income and your expenses. If you're a nonprofit or church, you should be keeping track of your donors and gifts that are made. You also want to make sure that you're keeping up with your receipts. For business owners, are the expenses ordinary and necessary? When you have all of that together to provide proof that your expenses were ordinary and necessary, an audit can be inconvenient, but you don't have to worry about being in trouble. Okay? So, again, rule of thumb, business expenses need to be ordinary and necessary. Now, I mentioned earlier that with the individual, they're making sure that the information is reported on the tax return correctly according to tax laws. The same goes with an organization. Okay, so we're looking at the books, we're looking at the accounts, the financial records, but then they're looking to see how it shows up on the tax return. I'll give you an example. There are some assets that a business owner may invest in to bring in more money. And if you don't understand how the tax law works, you may opt to write that expense off in the year it was purchased. However, depending on the type of asset, you may not be able to write off the full cost in the year it was purchased. You may have to do what we call depreciating the asset. This means that you expense the item over its lifetime. I'll give you an example. For a computer, and this is not a blanket statement for all computers, but for computers, we have a lifetime. If you look at our depreciation tables, a lifetime of 5 years. Now, let's say somebody bought a $5,000 laptop or a $5,000 desktop, whatever it is, they bought this computer for their business for $5,000. The IRS, unless there's a special rule for bonus depreciation that year, is not going to allow that $5,000 asset to be written off completely in the year of purchase. Instead, depending on the method of depreciation, yes, it gets trickier. Let's assume we have straight line. The taxpayers, the business owner, would depreciate that computer over the 5 years. So for each year, we have $1,000 expense instead of a $5,000 expense in the first year. So if that is not reported correctly, the IRS is going to potentially look at this and say, okay, you have understated your income because you overstated your expense. So that's a situation where maybe you weren't being malicious, maybe you weren't being negligent, but you didn't understand how the tax law worked. In this situation, the IRS could decide to hit you with an accuracy related penalty, or they could come in and do a correspondence audit or an in-person audit. In this situation, you would need to provide documentation as to how much was spent, the lifetime of the asset, and then you would need to be able to show, according to tax law, why you decided to expense the whole thing in 1 year. Okay. So in the audit, what we are doing is making sure that everything is in alignment with tax law. So again, this can be overwhelming. What I'm going to do in this series is talk about why people get selected for an audit. Okay. And then I also want to let you know what happens when you agree with audit findings and what happens when you disagree with audit findings. So we'll have this three-part series, this being part one. I do want to let you know, if you're listening to this and you're like, oh my goodness, I'm in the middle of an audit right now and I don't have the documentation to prove that these expenses are legit, or I was missing these income documents and I just can't do this. You do have the right to tax representation. And this is when you hire a tax professional to come in and stand in your stead with the IRS. So this could be an enrolled agent, such as myself, a CPA, or a tax attorney. And what we would do is meet with you, do our research about the IRS findings, and then represent you before the IRS throughout the audit to ensure that you can get the best results. Now, sometimes the best results aren't always you don't owe anything and there's no adjustment, but we are there to help you stay out of trouble, criminal trouble, and we are also there to help you avoid any unnecessary penalties, even if additional tax does end up being assessed. Now, this is a service that I offer in my firm, Bowen's Tax Solutions. So if you are interested in having a phone call with me, you can book one at www.bowenstaxsolutions.com. And even if you know you need help and you're thinking, I don't know, Timlin, if we're going to be a good fit, that's fine. I don't take it personally. Just make sure you go out and get the help you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.